You're listening to What's Up Digital Lending, the podcast that explores the exciting world of digital lending. We make a deep dive into the most important issues and talk to the leading minds of the ecosystem.
Hi everybody, my guests today in this episode number 12 are Maier, founder and CEO at Chartered Investment, and Denecke, founder and CEO at 12x12. Chartered Investment is a digital infrastructure provider when it comes to making alternatives investable, and 12x12 is a music financing platform. Today's episode is about the securitization of cash flows from music rights. My name is Constantin Fabricius, and I'm the host of this podcast. Before we start, listen carefully to the following. The content of this podcast is expressly not to be considered investment advice. That is intended solely for your information. We do not assume any liability and will not share any profits. Okay, let's start talking now. Welcome Daniel and Jan. Great to have you guys in the show.
Hi, Constantin. Thank you for having us, or especially for having me. Very much looking forward to have that conversation.
Also, warm welcome from my side, Constantin, Jan.
Would you be so kind as to briefly introduce yourselves? Who are you? What's your professional background? And which company are you speaking for today? Would you start, Jan?
Sure. First of all, my name is Jan Denecke. I'm representing the company 12x12, a music financing platform. Myself, I have a legal background. I was a copyright and media lawyer for quite some time and did a startup back in the days, 2016, where we set up a system to document license change on the blockchain. And then on 21, I founded with two other co-founders together the company 12x12, which I'm now 100% committed to.
Oh, great. Okay. Daniel.
My personal background is in Bavaria, where I'm born and raised. And then at the beginning of my career, started in global markets banking with a Düsseldorf bank called West LB. Made my way there through the typical retail structured product, started off as a structurer for interest rates products, which were sold to the savings banks market, and moved onwards to different asset classes from sales to structuring back and forward. Did some other stations in global markets business, and then in 2013 decided to leave the traditional banking sector and founded Chartered Investment. And since then, I'm happy to develop that company and to drive that forward. Now still living in Düsseldorf with my family, and meanwhile also saying that there are other nice cities in Germany instead of Munich. So also Düsseldorf is a wonderful city to live with a family.
Yeah, great. Thank you, guys. For me, it's a special podcast today. For the first time, we have two companies talking about their cooperation. And it's a pretty exciting collaboration, I think, because it brings together the areas of music rights and securitization. Two things that we have never had on our shows before. Therefore, could you perhaps introduce your companies more in detail and tell us how you got in touch with each other? Where do people from such a very different sector meet?
I can start and Daniel for sure can add. So first of all, as I said, 12x12 is a music financing platform. And there is a specific challenge in the music industry, which is due to the long payout circles and leads to the fact that most of music rights holders have a problem to get liquidity. So I'm sure we're going to dive into that topic later in more depth. We came up with the idea to solve that problem in regards of securitize and then also eventually tokenize future music cash flows to give music rights holder the ability to access capital more easily. And we as 12x12 position ourselves more on the asset sourcing side. We obviously have our knowledge, in-house knowledge in regards of structuring and evaluation of the specific cash flows, but we are not the experts in setting up these structures in a way that they are super easily accessible to different investor classes and also super cost efficient, which leads to the fact that you can offer better products in the end to the music rights holders. So that's said beforehand, just to jump into that discussion. And that was the reason where we specifically were looking for partners that actually take over alongside to our heavy lifting in regards of sourcing, evaluation, the heavy lifting in setting up the structure and taking over a lot of regulated bits and pieces in that process. And it was way back, actually, it was, I think, in 2021, at the end of 2021, 2022, where I coincidentally was introduced to chartered investment by a friend over 360X, Fabian, and also he was those days at the board of 360X, and he said, like, hey, Jan, you have to talk to these guys. You have to talk to these guys. And I remember it. I was in New York, and I was looking up the website, and I said, like, oh, that's a great thing. Actually, that kind of really solves the problem that we are having, because in these days we actually were thinking about setting them up by ourselves, like issuing a security token, creating a special purpose vehicle, and trying basically to figure out how that could be set up and also set up in a scalable way. So I reached out very briefly, and I had a brief discussion. Daniel, I don't even know who I was talking to, but I literally reached out via website to you guys. And then we realized that we weren't that far in the sourcing phase. So basically, we haven't had enough assets basically that it makes sense to jump into a partnership. And then I think 1 year later, or 1.5 years later, there was a very much closer discussion, and we were a step further in the amount of what we actually could source, and that's where we started to jump into a deeper discussion, which ended up then in the fruitful partnership that we are having right now.
Yeah, what I would say, it was not a question whether, but it was a must-have that we must meet anyways, because securitization and assets go hand in hand. So securitization is making receivables available through a financial instrument. So it was not a question if we should meet, but only when we should meet. So we were also very happy that then this turned out by the reach out to us, and then to pick up that very exciting topic and to bring a new asset class into the securitization world. So that was indeed the starting point of a very exciting journey. And indeed, what is quite funny, which I didn't experience in global market sales or structuring beforehand, many of our projects are coming through the contact form from our website. So it's astonishing what you usually don't expect, but that's our best salespersons. Our best salesperson is our contact formula at the webpage. So that's a nice factor. And I think it's rooted in the fact that we have been able to achieve a good reputation in the market for what we are doing and kind of disrupted the securitization market by making it available also in smaller size and in more alternative asset classes, and to secure those into a financial instrument.
No, maybe to add to one thing, which I think, and then you're totally right. I think it was super important for us also to have a realistic approach to securitize the cash flows that we actually source, because what I said in the very first beginning, we thought that the tokenization is the right way moving forward, which I'm not saying that it isn't not. But in regards of investor access, we then relatively quickly understood that we have to basically offer both things. We have to offer a possibility where we can tokenize it to deal with the needs on the market on more like innovative investor setups, but we also have to deal and set up a structure that is available for investors.
Yeah, I would go even as far to say that securitization is tokenization. So it's both the same. It's both making a certain receivable available to the market and it's just a different format. So securitization in its traditional form is making it available through a clearable financial instrument. And now with the tokenization, we make it available through a security token. So that's just the pure format, which in my point of view is less important than the asset. And the asset is the most exciting driver of all transactions, because that is the source of the return, and that's what the investor is interested. The investor is not interested, I can book now a token in my wallet, or I can book now something in my custody account. The investor is interested in how he can get the return and how safe this return is. And that's also in the setup we have been exploring with 12x12, is that if you think about receivables, it's always about the question on the one hand, the quality of the receivable and the quality of the collection. And the quality of the collection is a very difficult thing. When we look back in time, we had the situation with the low interest rate environments, and investors were buying almost everything where they were getting some kind of a positive return. So quality of the asset was at first hand important, but of the collection was less important to investor. And then they learned, okay, there are other risks involved in that. There are fraud risks, there are collection risks, which you do not want to have if you can achieve interest rates again in traditional financial instruments. And today we are back in an environment where you have positive interest rates. So investors must be pursued in a different way than only telling them, hey, you get now 6-7% interest or 4%. Security matters. And that's when we started the discussion with Jan, which was very thrilling to me, that they solved the problem of the collection of the receivables by introducing GEMA to that, which is, and Jan, eventually you can outline of that to the listeners, which is a very specific German thing, but this is changing the full story of music rights, I would say, and securitization of music rights.
Yeah, 100%. I think you're totally right. I mean, the format, how you basically do the securitization on, needs to be the most effective format you have to actually push the sales to the investors. That's our understanding, and get the best out of it as we are solving the problem lack of liquidity. I just want to mention that in the very first beginning, in 2022, we actually started to do our MVPs on a pure security token, very small issuances. We did two ones, one about 50K, the other one about 100K. We didn't use the infrastructure of chartered investment back then. But the moment actually we started like increasing the amount, and we actually want to reach more investors and also professional investors in different segments, also talking to institutional investors, we needed a structure that is in the very first beginning fully regulated, and on the other side also fully secure and also well known for the different kind of investors. And on the other side, what Daniel said, I think the unique topic on the music asset that we are securitizing here, and Daniel is totally right, is the way how it's actually, how the cash flow is actually set up in the structure, super secure. It's because it is collected by GEMA, and GEMA is one of the fourth biggest collecting societies in the world. They're cashing out, I think last year they cashed out 1.2 billion to the rights holders, and they are overseen by the DPMA, Deutschen Marken- und Patentamt, and the Ministry of Justice. So they actually are, in a sense, speaking in financial terms, a regulated company. And they are basically responsible to collect all these cash flows for the rights holders. And I think it's super important also to understand that we are not securitizing the rights underlying to the cash flows. We are securitizing only the cash flows. So we are not purchasing catalogs, which makes the whole asset much more uncorrelated. Because if I'm buying a catalog, I'm highly dependent on the interest rate that is out there, because I need to bring up the money to buy the catalog, and the catalog is actually the price of the catalog is determined by Angebot and Nachfrage. Mm-hmm. What is the English word for it?
Buy the market. Buy the market. By the way, the best description of offer and demand I ever seen is in the, and my kids are not that old, in the Disney film The Ice Prinzessin, Ice Königin, where you have this scene where they go into this, it's winter, it's snowing, and they go into the shop, and she wants to buy I think it was a code or something like that. And in the Swiss accent, then it was surprising, suddenly becoming winter because this tragedy happened. And then she wanted to buy this, and she said, it's now in the Swiss accent. So it's now very expensive. It's like 10,000 thingies now. And then she asked why. And then he said, well, we have a fight between offer and demand. And that's the price now.
Yeah.
So
Yeah,
lovely thing. Very badly explained in English. Sorry for that.
Back to the catalogs, they are basically the price is driven by offer and demand. And obviously the demand is higher if the interest rate is lower on that specific thing. The cash flows of a catalog are only driven by consumption. And so if a song is going to be heard, and the consumption doesn't care if the catalog is valued by a multiple of 8 or 12 or 15. So securitizing only the cash flow of the music rights gives you a uncorrelated asset in the end. And especially if you look at the different kind of consumption possibilities. For example, streaming is even more uncorrelated because, we all know that I can't imagine a world without streaming, even in a long time future. The devices might change, but the way actually to distribute music or other things to the end user will be mainly done by streaming in a digital way. So anyway, and that's why we decided, and I think that's super important to understand, that's why we decided not to securitize IP rights with the underlying rights, but only the cash flow, because the cash flow is driven by the consumption, and the consumption doesn't care if the interest rate right now is high or if it's low. So it's basically uncorrelated. And I think having that great asset set up in a structure, back to what we are doing with Daniel together, in a structure that is open for all different kind of investors. On the one side, back to the format, you can tokenize it. You can use a token as a format to basically put it out. And we all are believers in, I'm a believer in tokenization in the end as a format, because it will lower down the costs. But right now it's still a super attractive way to have it still in an analog way, in a usual bond, as we have it set it up right now.
To put it in a simple sentence, we are doing something in the traditional finance world, which is there forever. Mm-hmm. It's factoring and it's securitization. Exactly. Two very boring, old-fashioned financial instruments. Now, there are two things which are, I think, exciting and new. One is the asset, what Jan just outlined, that it's the music rights and the cash flows resulting from the music rights. Personally, I love the collection scheme through GEMA. And the second thing, which we just flavor a bit over it, is the tokenization part. But that's just a flavor we put into it, the game, for those who like the taste of having something new. For those old-fashioned bankers, where I'm tending a bit myself to as well, it's factoring and it's securitization, the two oldest financial instruments in the world.
Okay, sounds really interesting. I have a couple of questions. First one is, Jan, you mentioned that this kind of business is neatly regulated. So I have understood that your company, Daniel, is neatly regulated according to EU law. But what about your company, 12 by 12? Is it a regulated music financing platform? What can you tell us about it?
So there are different parts as we look in the different bits and pieces what we are doing. On the sourcing side, it's not regulated, and the sourcing part is an unregulated business that we are doing. If we look at the distribution side of the financial instrument, it's obviously regulated. We are under a liability umbrella and doing our distribution in that end. But in the end, we are really working together with specific distribution partners we have onboarded, which one is 360X right now, also invested in our company. So there are different kind of parts. And in regards of the financial instrument, obviously all the regulated parts are done by Daniel and his company, by Chartered Investment. And we are the basket advisor in that specific structure.
Okay. And okay, thank you. Understood. My second question is with respect to the cash flows. Understood as well that this business model is focusing just on the cash flows, and it makes things easier. But also with respect to credit risk assessment, because I think this is something you would have to perform as well. And when there is coming up some artist offering cash flows. So how do you perform this exactly? I would assume it makes things easier with respect to the outcome of this assessment. But please, could you elaborate on this a little bit further?
Let me take the start, and then Jan, you continue with the specifics. What we are doing is we are basically telling the artist, we buy 4 millions of future income from you at a certain price today at a certain discount rate. So we discount the 4 millions over the expected time, and then we say we pay you that today to have that cash flows coming in. The collection is super safe through GEMA. So the credit risk of the collection and of the money, if it's consumed to get to us, I would go as far as almost that's a given. So what is the uncertainty? The uncertainty is when does the seller of the right reaches the 4 million of right income? Is it in the expected lifetime? Does it get longer or shorter? And that's where it's the statistical analysis of Jan comes in. It's not the traditional credit risk assessment where I'm looking at a balance sheet, but it's the statistics of the usage of the music. Then it's very fascinating if you think about how you value that. How do you value a new musician against a old school evergreen sound which you're hearing? So it becomes a completely different and exciting story. And now I hand over to Jan to explain that.
So have I understood correctly? So Taylor Swift, would she be assessed at all?
Daniel described it perfectly. Just to add a couple of points. One is when we buy the cash flows, the future cash flows, we obviously have a purchase price and then a discount set beneath it. And with the discount, actually, we cover up the different parties involved, like administrative costs and interests and whatsoever.
And Jan, before you continue, I just love Constantin's example with Taylor Swift. It's perfect. So let's assume Taylor Swift, how much is he making per year at the moment? 200 million, 100 million? It's huge, or? Even more. So that would, let's say she makes 200 million a year. So if you think I'm securitizing from Taylor Swift at the moment, 20 million, I'm buying it at a discount rate. You know those 20 millions are in 2 months. So with Taylor Swift, you can only do a money market paper with a low interest rate, because very quickly collected. Now you think on the other hand, what's one of those gangster rapper newbies, Jan?
You got me one of the newbies. One of the old ones is definitely Haftbefehl. I have a shirt up there, but
Haftbefehl. Okay, let's take Haftbefehl. How much does he make per year? How much did he make last year? 2 million, 1 million?
More. 5 million? I don't know.
So if you want to securitize 20 million with Haftbefehl, you are in a maturity of 5-6 years, and you obviously would like to have a much higher discount rate because it's unsecure when you're achieving that. Taylor Swift against Haftbefehl. So I think that describes already the pricing.
Okay. Yeah, I think it's also to make it very clear, or make it also a little bit clearer, is that the claim we basically purchase, we put down as a global assignment with GEMA, and it sits there until that global assignment is recouped. So it's all about the term, as Daniel rightfully said. Like, how do you evaluate actually the term, and when in which term is that global assignment recouped? But the nice part is, and that's why you, in a way, don't have a real credit default risk. You more have a timely risk in that topic, because if you evaluate the cash flows in a right way, it's just a question of time until it is going to be recouped anyhow, because as long the global assignment stays with GEMA until the cash flows are going to be recouped. And that is why GEMA is such an important partner in there. And they are collecting the money and overseen by the Ministry of Justice. So you have a very secure partner who's collecting the money for that global assignment, and your global assignment is very secure positioned there to make possible that you actually get your money back.
Also, I spent some nights to assess the risks, which is also, I think, a completely different exercise than in traditional receivables. As Jan said, you kind of have a timing risk, but what drives that risk? So it means that an artist suddenly becomes unpopular and is not heard anymore. How can this risk be materialized? By him doing something very unpopular, his music getting outdated, death? I don't know. So it's difficult to assess what are the real risk drivers there, or different than in traditional finance.
That's what I said. Like, you have to understand a little bit how music works, how the music asset itself works. First of all, the music market overall grows every year about 8%. And the reason is pretty simple. More people, more devices, and basically that's it. And streaming is the most relevant consumption driver with 80% of the revenue overall. So that's basically how music works. And on the other side, you have to see if music is consumed, and if a song, for example, has reached a certain point of success, it basically has a peak and then it falls down on a plateau and it stays on that plateau. And that plateau basically raises about these 8%, 6 to 8% every year due to all different kind of the overall music market, how it basically grows. So you never have, and if you basically look how we do the prediction, we basically have huge data sets of historic cash flow data that we are actually looking into. And these data sets we are using for the backtesting of the evaluation that we are having. And on the other hand, we have eligibility criteria that we look the artists. So we don't take in the end, let's say, the artist that never had any kind of success. So we are not doing a scouting here. So we don't bet on, let's say, he's now a famous star on TikTok and he never has generated any kind of revenue. So we have eligibility criteria where we say he needs to be at least, we need to have at least like 4 years of historic cash flow data over the existing catalog that artists already created. And on these cash flow data, you can basically say where is he with his back catalog, on which plateau it is. And that gives you a pretty secure look into the future, how it's going to be, which money that catalog is going to make in the future, which plays down to the global assignment. So and back to Daniel, what he said, like, even if a artist, let's say, misbehave in public, doesn't mean that the catalog is getting, or that the music is not consumed even more. Look at Michael Jackson, for example. Look at Rammstein, what happened. I mean, there are no changes in the end about the consumption of the music work, because it works different. A fan is listening to the music, whatever that specific artist is doing in future. So it's different to, for example, an influencer. If you have influencer cash flows and he basically does something political incorrect in public, he doesn't get his next deals anymore to market any kind of product. With the music, it's completely different. And that's why it makes it so interesting. And you, in the end, have a timely risk. Might that the plateau, out of whatever kind of reason, falls a little bit down, but it will never vanish completely away over the term you basically evaluate. And the products that we are issuing right now have a term of 4 years. And in these 4 years, you are pretty sure to predict what is going to happen within these 4 years to actually recover what you actually had brought out as a bond.
Okay.
Yeah. So on the securitization side, and again, speaking in traditional terms, 12x12 is the originator of the asset. He has 2 roles. One role is determining the price which can be paid, so the interest rate, doing all that statistics Jan was just outlining. And the second thing what he's doing is access, because you need to find the one who actually sells it to you. So those 2 roles need to be fulfilled. And I think the first one Jan already described wonderful, the pricing is the statistics of that. But what I also found very and super exciting is how you get access to those artists. Because that's also something in financial world, you usually only see statistics, strange things. But here it's about something not tangible, but something which you know. You speak about artists, you know, you hear them, and that's very fascinating. How do you have access to that?
That's also super important. So I said, we are solving a real world problem for the music rights holders, and it's lack of liquidity, because the music rights holders, even if they are successful, lack of the possibility to get access to capital. So if they want to get a loan and go to a bank and say, like, I put as security my catalog as a collateral down, the bank would say, like, it's nice, I can see it's generating revenue, but I don't understand the asset. I can't evaluate it. And even if everything goes south, I can't liquidate it. I don't know how to basically bring it up to market and sell it and liquidate it. So that leads to the fact that normally for a musician or an artist, the way to a bank is closed. And even if they are successful, the other way to access capital would be to going to publishing companies or label or get an advance. But in these kind of advance payments, it's always combined with an administrative deals, and you normally have to give up rights. So you basically normally raise very expensive capital because you give away rights, and that relates to equity to yourself. So if the artist becomes much more successful, he would have done better if he wouldn't have given away his rights because the asset has been grown. So that's actually the problem that we are solving. And with that problem, we are going into the market. And that's actually where we are positioning ourselves. So in 12 by 12, we try to figure out a way how we actually can give him access to the best possible conditions that we actually find out of the market. And if the investor is now coming from the other side and we bridge that gap between the music rights holders and explain the investors on the other side within a structure that we just described and a prediction model that we just described and a legal setup that we just described, that it is a very good way to invest into these cash flows. We have opened up the gate between a capital on that side that had been never a direct access to these attractive cash flows in the end. And on the other side, we have opened up for the rights holder a new growth capital that he can use actually to extend his creative work and build out his business. And in the end, if you basically bring two things together, I think there is a very important topic also to mention. You have an impact investing what you're doing, because you bring basically capital to a cultural very high good, which is music in the end, which is a very old and very important cultural product that we are having here. And I think this is something that is also super important. So we are not, and I always try to I always emphasize that we are not a investment banker bringing new assets to the market. We are basically serving a purpose to solve a real world problem for the music rights holders, which is lack of liquidity.
Yeah. What's the next? What did we do so far? Jan said and outlined, yes, early days 2021, you did your proof of concept. Then we did, I would say, together the first investable product last year.
Yeah.
And now we are working on fine-tuning of that, fine-tuning the cash flows, fine-tuning the structure, thinking about what kind of favor we can put on top of that. Tokenization is one of the next points. But I think we are now starting to roll out, to go into mass production. Or how would you describe it, Jan?
100%. So we did the 2 MVPs. Now we have our first real product set up. I mean, we cashed out roughly about 5 million to the rights holders, which is only for the German market, which is already quite a significant amount for the rights holders we did it for. And now we are trying to optimize the product. So what do we need for that? And that's I think where the cooperation between Chartered and us is really coming to life, is actually to optimize the product and level out both interests. One on the investor side. So what is he actually? What does he really want? What different kind of products does he want? Right now we have a fixed interest bond 8% bullet structure, but there are obviously also for different investor interests other structures more favorable, maybe an equity like, where he can also participate on the success of the asset. And on the other side, just level out the interest of the rights holder. So how can we find a way to lower the cost, to basically make it more flexible, to get more assets in, and so on. And last but not least, obviously on the sourcing side, broaden it up on the territories. We are currently also looking at UK rights holders, Swedish rights holders, and also Italian rights holders, which are very interesting. And also looking at different rights classes within the music industry. So right now we are I don't want to jump too deep into it, but we are looking at publishing rights collected via GEMA, but there are also other parts like on the recorded rights to basically set this up. So there is a huge market that we actually have to then in the end with Daniel together also create the bigger ticket sizes.
Yeah, you have just mentioned it. It's a huge market. That's one of my questions. How big is the market, and are there any other competitors to you to 12 by 12? What can you tell us about the general situation in this segment, in this highly appealing segment, I would say, after all I've heard now?
So on that specific product, there are no competitors in that market, especially in regards of the securitization of the future cash flows and providing it as a real financial instrument, which is in future also should be a liquid financial instrument if there is a market. There are most of the competitors are basically acquiring rights and buying rights. So if you, for example, take Hypnosis, which was not a good example right now due to the reasons we elaborated in the beginning of the discussion, they bought in for high prices with low interest in low interest terms, and now they are selling off for low prices in high terms. So that's actually the and we have a very good comparison to our product and the so-called music phones or song phones products. So that's one side, and then there are different other competitors which are more coming from the music side and dealing with distribution advances. But that specific product, how we together established it, is really unique. And I think the most uniqueness, we talked a lot about it, is the risk profile of the product. Because, I mean, obviously, I can go out and find you a lot of possibly music investments, but there is a high risk profile, and not only in how the asset in the end performs, but also in the structure, how it's going to be set up. So the insolvency risk, which sits in the structure, and that is basically something that we have mostly carved out and reduced nearly to zero, because like with the global assignment, which has been set up with GEMA and all these kind of things, gives you a complete other structure. As I said, the market is highly attractive. I mean, it's still obviously music is still kind of a niche market in regards of the financial market, but music as an asset is a perfect alternative asset for portfolio diversification. So the music market grows yearly by 8% roughly. I mean, leaving out the pandemic for 1 second, and it's roughly about 40 billion big. And so just to give you another number. Another number is, I think in 2021, the catalog sales were roughly about 12 billion.
Wow. Okay. That's interesting.
Okay. So just to give you a ballpark, and maybe just a fun fact, which is also quite interesting. The product that we actually structured, the first one who did it was David Bowie, developed by a guy called Mr. Pullman, which was a very famous investment banker. And David Bowie, back in, I think it was in the 90s, 91, he basically did a securitization of his cash flows to buy back his rights and he brought out a bond over 50 million. So just like, and that's actually something which is which we had also in mind to bring that out, not only for the big ones, but also like creating basket and copy that idea basically into our product, obviously in different and more different ways, but the base structure of it is similar to that.
Okay, thank you very much. So it's been so far quite interesting. We have been discussing the origination and the sourcing side. We have spoken about the market, and what I think where we should shed light on now a little bit more is the investor side. So this is something where we have not been drilling very deeply in so far. So what do we know about the investors? What kind of investors like this kind of niche segment, and And what we have not spoken so far explicitly about the returns, things like this. What should the audience know about this, guys?
Well, it's like always, if you have a new asset class you bring to the market, you have a certain journey to that. So this journey is very similar for everything which is new. So you will not see on day one the big insurance and pension funds coming in because it's new. So those are not the day one investors. The day one investors are usually wealth management clients and wealth management funds, which are basically advised by an asset manager for his clients who has the time to look into such a specific thing and who's paid for finding those special cases. So, and I think that's also what we are having here. We have a first round of wealth management clients investing either directly through their asset managers or through the funds managed by the asset managers. And then this journey will continue. And that's the second big part of the job Jan is doing and needs to do, is to educate the market of this new asset class and about the risks of this new asset class, so that over time, further participants are attracted to participate in that market. And the journey usually then goes on that you, at some point of time, you have more funds which are willing to invest. Then you have a bit the retail market which opens up. And in the end, the big institutionals are following. But those are usually the latest one which are coming into the game.
Yeah, no, 100%. So I would emphasize what Daniel said. Like, education is a very, very big topic, and obviously, if you bring in a new investor class, a new asset class, you have to build up the trust, and they have to understand the product itself. But I think we have done very well in that specific topic, and I think depending on the product that you are structuring, for every shade of gray of investor, there is something in that is interesting. I think it's a question in the end. If you're talking to institutionals, obviously, what is the size of the offering in the end? And we are obviously not there yet, but we are tending. And as I said, like, the market is huge. We are tending to get there. Right now, the specific investor class that we are targeting, or not targeting, I think, which is most appealing for it, is family offices, multifamily offices, ultra high net worth clients, and everything else beneath that is basically considered to be a professional investors, obviously, because our offering is only going out to professional investors. And I think in that kind of area, we are feeling very comfortable. And the product that we are offering right now is, as I said, like the 8% bullet structure, 4-year term, which is also from a structure, let's say, super easy to understand, which was the intention basically to do it, not to come up with too many different and complex structures, and just say, like, let's explain the asset class. Let's go through it. Let's give them the time to understand it, show how it works, and also create a structure that is also easy to digest.
Yeah, so from a risk return perspective, you have returns which are comparable to the corporate high yield market, so high single-digit yields, but with a risk profile which is a very different one, where you have in the corporate high yield markets the factors of the economy strongly coming into the game. You have this factor very limited here. So you don't have the overall economy risk, very low beta to that one, but still returns in the same area. So it offers diversification in that bucket. And again, if you take a look who's the first one who can go into that, you are in the client group Jan was describing, who has the time and the willingness to look into such a non-traditional beta diversification of a portfolio.
Great. Thank you very much, guys. That was really very interesting. And I am absolutely convinced that this product will have success in the market. And I think so because that's another brilliant example for Fintech Lending business model. And as we have seen in the past now for the past years, many Fintech Lending models have been successful because banks retracted due to their policies. And these gaps that have been left open have been filled by digital lenders. And that's another brilliant example how these gaps can be filled. You have outlined on this earlier, Jan, that banks are not really in the market and are willing to feed in monies into these segment. And yes, that's the perfect place for alternatives. So thank you very much for your time and for elaborating on this so broadly. I wish you all success, guys.
Thank you very much, Constantin. And I hope we hear more of that.
I hope so too. The next stop might be, this is what I don't want to leave out, is a conference that we're going to have next year on May 21st in Frankfurt. It's the third lending summit. And that would be a great place for you guys to present this product once again. And why not discussing this in a broader scale together with other experts with respect to the music market? I think it's really, really interesting. And I'm so happy that we have spoken about it today. My first touch on music rights and securitization. Thank you very much again.
Thank you so much, Constantin, for having that discussion. And it was really great. Also, Daniel, I mean, I love talking to you anyhow, you know that. It's always a great discussion to have.
Thank you very much, guys.
Thank you.